Be strong.
Away. So there's going to be three big issues that we're going to have to worry about for the 2021 tax season that we're going to file in 2022. So this child tax credit is in advance. And if you got money from the advanced child tax credit in error, you would have to repay it. There is a safe harbor, which we'll go over in one of the slides. But unfortunately, if you receive money and things change and it's not in your favor, there will be you will have to repay that money, but we'll go definitely into that. So as you know, what happens if you have a child under the age of 6, you get $3,600 per child. The government advanced you 50% of that over a 6-month period in 2021. And if you have a child between the age of 6 and 17, there was a $3,000 credit, which was also advanced to you. This credit is actually fully refundable. So what that means is if you had unemployment, you weren't working at all in 2021, you still can qualify for this credit. In prior years, how the tax law worked, you had to have some form of earned income of $3,000 or more. That law has been erased. There is no earned income floor. So you could do nothing, honestly. And if you have a child and that child is your qualifying child, you would be able to qualify for this credit. So I think that's a very good thing to know. So we know that there's going to be people filing that received unemployment and didn't receive any income that still will be able to get this credit. So the safe harbor. So what does that mean? The safe harbor means that the IRS used either your 2019 or your 2020 tax return to figure out this credit. But if you did not have the ability to claim that child on your 2021 return, because remember, this is in advance. 2021 tax return is filed in 2022, the year hasn't ended. So if you come to file your return and we realize that you're not claiming a child that you claimed last year, you may have to repay some of this credit. But the government stepped in and say, hey, listen, we'll give you a safe harbor. And that safe harbor basically ends at certain income limits. So as you can see, if you're married and your income's under $60,000, you have a safe harbor. If you're head of household and your income is under $50,000, you also have a safe harbor. And if you're single and you have a child and you're not claiming head of household because you don't keep up the household, your safe harbor is $40,000. They'll give you a $2,000 exemption. So if the government advanced you $1,800 and you don't have that child on your return, you don't have to pay back that advance because you have that $2,000 safe harbor. So that's going to help a lot of people if they weren't really thinking about it, especially people who have separation agreements, who got divorced in 2021, who have an odd or even agreement. This is going to be very important because some people were getting the money and didn't really even know it. It was coming almost every month, but you couldn't even know. Honestly, my wife had to tell me that we received the money. I didn't even know it was coming in the bank account, and I'm an accountant. So I know this is going to be an issue for a lot of people that may not realize they received the money and did not go on to the IRS portal to turn it off. Because when you turn it off, both the husband and the spouse have to turn it off. So how to avoid this issue? What we really ask you to do is bring in the IRS form 6419. You should have received this form. That's what the government says. You should have received this form in late December or early January. If you haven't received it, it's not the end of the world. Hopefully you'll receive it before the tax season starts in the office around February. But we do need that form. That 6419 form basically lets us know how much money you received in advance. If you did not get that form, there's an IRS portal. You can go to the portal and you'll be able to see how much you received in that portal. When we have it on our personal expense worksheet, when we get to that slide, we'll definitely go over how the personal expense worksheet has been updated to make sure that you are fully prepared for this tax season. And worst case scenario, you may have to do some checkbook accounting. What that basically means is you would go into your bank account or your checking account and see around the 15th of every month, starting in July, if you received a deposit from the federal government. And if you did, you add those numbers up and you provide that to us. I mean, that's a worst case scenario. It would be in our best interest to get some verification. And the reason why is we learned from last year, if you do not get it right, it's going to delay your return. In addition to that, the IRS may give you a refund in error and then ask for it back. Or worst case scenario, they don't give you the refund and you think you have a refund and you actually owe. And you get a letter saying, well, you thought you had a refund of $1,000, but you actually owe us $500. So we definitely need to know that information. So the second big issue, so I say, is the recovery rebate. And that's basically the stimulus of the $1,400 that Biden gave. This is not going to be as confusing as it was when we got the stimulus through the Trump administration, because it was broken into two parts, $1,200 and $600. And honestly, 2020 was a blur. A lot of people didn't really remember, did I get $1,200? Did I get the $600? In addition to that, the $600 either fell in December or in January of 2021. So either December of 2020 or January of 2021. So it made it really hard. This year, it may be a little bit easier because it's $1,400. And this one, unlike the advanced child tax credit, if you get money in error, you do not have to repay. So that's great. The money was in advance, like I said before, $1,400 for your dependent. If things change, what that means is, just like the advanced child tax credit, they use your 2019 and their 2020 tax return to figure out that credit. So if your income was high on those years and you didn't get the whole $1,400, you only got $1,000, when we file the return, you can get that additional $400. We have a client out in Texas that welcomed a new child into their family in December. That person not only gets the additional child tax credit of the $3,600, they would also receive the $1,400 because that child was not born in 2020 or 2019, so no one knew about it. So those are things that we have to definitely think about. But once again, the biggest thing is the form. We need a form. So the IRS, just like the advanced child tax credit, is going to give a form called a 6475. And that form would let you know about how much stimulus money you should have received in the year. There is, once again, there's an IRS portal that you can go on to, and that IRS portal would be able to let you know how much you received. Of course, you'd have to set up an account and verify yourself. And last but not least, you can do some checkbook accounting. And our personal expense worksheet, once again, we're trying to make this as easy for you as humanly possible. That's our goal, as easy as humanly possible. So when we talk about the personal expense worksheet, you'll see that we have links embedded on that PDF that you can just click and be able to go straight to the website to check out the information. So the next big thing that changed is the child and dependent care credit. Now, people sometimes get it confused of the child and dependent care credit and the child tax credit. They're two separate credits. The child tax credit is for having a child. The child and dependent care credit is to have a child, and you're also sending that child to child care in 2021. So the credit expanded. It used to be $3,000 per child. It went all the way up to $8,000 per child. The credit is now 50% rather than 35%. And the reduction rate is even lower. So in the past, the reduction rate was about like $43,000. Now it's $125,000. So this is really going to change. Now, some people took the benefit of taking it through their employer, which is not a problem. Your employer should increase the amount of pre-tax from that $5,000 to $10,500. So if they haven't, definitely speak to your employer. And the good news is it carries over. So in the past, if you didn't use it, you lose it, you get penalized on it, but you have the ability to carry it over moving forward. So there's three rules that we have to understand about the child and dependent care credit that we're going to go over. And these three rules are some must rules. And the reason why is because the numbers went up. So this is going to be a high fraud area, and the IRS loves low-hanging fruit. They love it. So we're going to make sure that you're doing the right thing. So we're going to go over the 3 things that you need to know. And honestly, some of the rules suck. I'm not even going to lie to you. Some of the rules just suck. But once I explain to you the logic that Congress has, you understand why they did it this way. So the first rule is the age of the child. So the age of the child has to be under the age of 13 in 2021. With tax law, as of December 31st of that year, so the year we're talking about is 2021, whatever that child age is the age we can use for this credit. So if your child was 13 in November, their birthday was December 7th, they turned 14, unfortunately, we can't get that credit. And I know it sounds really, really bad, but it's just how it works. We've been through at least 4 or 5 audits on this, and it's so hard to win that we barely don't, to be honest with you. So we know this is going to be an issue. So if your child turned 14 in the year and you did have childcare expenses, unfortunately, we can't take that. If the child is over the age of 13, they must be unable to take care of themselves or disabled to take this new expanded credit. Now, this other rule is you and your spouse have to be employed or in school. So what that means is the IRS basically is saying, hey, if you are married and your husband or your wife is working and the husband's at home and just trying to make things work and he's not at school and he's not working and you send your child to childcare, the government is saying, well, we're not going to give you the credit. We're only going to give you the credit if you and your spouse are either working or in school. And the thought process is this is allowing you to do more work. And I know I'm a parent. I have 2 kids. You know, it's hard to do work when those kids are around. So I can really feel for a person where, you know, the spouse is home and just trying to take care of things and they just send the child away and you're paying money just so you can get things done. But unfortunately, if you are married and you and your spouse, well, both of you are not working or both of you are not in school, we cannot take this expanded credit. Residency. So in addition to the child being 13 and you and your spouse working or going to school, you have to prove that you have some form of taking care of residency. So what that means is if you are a single mother or a single father and you're living with your parents, you have a child and you're working and you're going to school, but you send that child to childcare, but you can't prove that you pay 50% or more of the living expenses of the home, we can't take this credit. And the thought process is if you're not upkeeping the home, that cost is more important. So it sounds weird, but just what it is. So some of those tax strategies that we are doing is if you do have a person that you're living with and you don't upkeep the home, you're not paying rent, you're not paying 50% or more of the expenses, and both of you, the people are doing taxes with us, it's easier that we can put that child on that person's return just for this credit. They don't get the earned income credit, they don't get the child tax credit, they don't get any other credits. It's just for this credit. The IRS allows us to do that. We put a Q code in there and they can just get this child care credit. So at least the household doesn't lose out on that money. So that's one of the tax strategies that we've been looking at. So how it works. So this is how it was prior. So prior, the max deduction per child was $3,000. Now it's $8,000. The max number of kids stayed the same. It's 2. It's just 2. So if you have 3 kids and you're going to childcare, it's just what it is. Got to kick the can. It's what it is. The maximum deduction that we could have took prior was $6,000. Now is $16,000. So you can see it expanded because in the past, people would come into our office and say, I paid $11,000 in change for childcare. And I'm like, you can only take 3,000 of it. And it hurt their heart. It hurt their heart because when you pay for daycare, it's a lot of money. Sometimes it's the same amount as rent. So it hurts your heart when you can't take all of it. So with this expansion, this helps out a great deal. So prior, how it used to work is your income had to be from 0 to 43 to get a higher percentage. So most people, when we did the return, would have got the 20%, $1,200. That's just the norm that everyone would see. Now what's happening is if your income is under $125,000 and you have two kids that are going, you're paying that max $8,000, you get a credit of $8,000. That's a large amount of money. That can wipe out your whole tax liability and give you a sizable refund. And as you can see, the credit doesn't really change that much when you go up in income. Is when you get to around $400,000 is when you don't see that much of a benefit, but it's still there. So this is a very big credit, especially for parents that are paying for childcare. This is going to change the game for you because this will help lower your tax liability when we do the return. And once again, we're going to need some paperwork showing how much you paid to the childcare provider, their tax ID number, and their address. So in the past, there were some people that would send the child to a family friend and they pay money and really didn't bring it in because they're like, I don't really care about that credit. But now I think you're going to really care about that credit. So, just knock on the door, let the people know that you need that information, and just want to get it.